Right, let's get on to the questions. First, I'm going to ask this to Richard. Richard, how are your portfolio companies faring in these current challenging economic conditions?
Yes, a good question, Annabelle. All of our companies are headquartered and based in the UK. And I guess if you look at the economic forecasts or the newspapers at the moment, you'd probably expect us to be fairly downbeat. But actually what we're seeing from our companies across a broad range of sectors and industries across the UK is a lot more positive than that. I mean, if you look at sales growth year on year across our top 10 companies, the rate of sales growth is nearly 80% year on year. So it suggests that the portfolio companies are trading pretty well at the moment, regardless of some challenges that may exist. I would agree that the level of demand has been a bit more choppy and a bit more inconsistent, and nothing goes in straight lines, but generally we're pretty optimistic at this time.
Well, that's encouraging. Over to you, Colin. How are your companies faring?
Well, I think it's fair to say that across all of our core geographies, the environment has got tougher. Rising interest rates, inflation, fears of recession, all else equal make things harder than they were a few years ago. But we've been very encouraged by the performance so far. Our companies have exhibited strong revenue and EBITDA growth of over 20% for the most recent financial year. And we back very experienced managers. They've been through these kind of conditions before. So we take great comfort from both the current performance, but also the experience of our managers to be able to navigate through volatile economic conditions.
Right, it's great to have that experience on board. Helen, how are your portfolio companies faring?
Well, similarly, we take note of what's going on in the environment, and clearly, our companies are not immune to what's going on in the wider macroeconomic environment. But again, we've been quite encouraged by the fact that in the last half year, revenue growth was 23%, earnings growth was 11% across our buyout portfolios. So pretty strong performance, all things considered. And I think a lot of it is due, not just to the active management, which Cole mentioned, but also due to the selection of the subsectors that we invest in, which generally are pretty defensive and resilient, and investing in areas such as software, which show great kind of recurring revenues and defensive growth.